All right, let's dive right in. The Dow just blew past 50,000 for the very first time. It's historic. But while most of the street is popping champagne, my eyes are glued to the one stock that could bring this whole party to a screeching halt. Yeah, the real story here isn't Dow 50K, it's NVIDIA, and why it might be the next big shoe to drop.
And there it is, 50,000. I mean, what a massive psychological milestone, right? This was fueled by a crazy last-minute tech rally that just shoved the index over the top. It's the number that's on everyone's lips, from the pros on Wall Street all the way to Main Street.
But here's the thing you gotta understand. While this number feels amazing, it's also what a lot of us traders call a fragile top. See the momentum that got us here? It could be running on fumes. And this big, beautiful, round number could turn from a new floor into a very hard ceiling, real fast. So, should we be celebrating, or should we be, a little bit concerned? Yeah, because the real story isn't that shiny number on your screen. It's a structural flaw, a problem baked right into the DNA of the Dow Jones Industrial Average itself. And right now, that flaw is being stretched to its absolute breaking point by just one company, NVIDIA. So, let's break this whole thing down. To really get the risk here, you have to understand how NVIDIA's incredible, mind-blowing success is actually, and kind of paradoxically, becoming a massive problem for the market's oldest index.
So here's the key. The Dow is what's called a price-weighted index. It's kind of an old-school way of doing things. It dates all the way back to 1896. And to put it simply, the higher a stock's share price is, the more power it has over the index's movement. It has absolutely nothing to do with how big or valuable the company actually is.
And this slide just lays it out perfectly. You look at the S&P 500 and a company's total value, its market cap. That's what matters. That makes sense. But in the Dow, nope, only the share price matters. And when one company's price gets as ridiculously high as NVIDIA's is, it throws the entire index completely out of whack. Which brings us to today. We're modeling NVIDIA's stock price to hit $1,800 a share. Now, at that level, the company's influence on the Dow becomes, well, dangerously out of proportion. It basically turns the entire index into the NVIDIA index, and it stops representing the broad economy like it's supposed to. Now, this is where the math gets really crazy. A totally normal, standard 5% move for a volatile stock like NVIDIA, that means a $90 swing in its price. But because of the Dow's weird structure, that single move in that single stock would yank the entire 30-stock index up or down by over 640 points. That's not an index, people. That's a hostage situation. So, what's the fix? Well, it's not a rumor. It's the company's playbook. A stock split isn't just some vague possibility at this point. It's a mathematical and, frankly, a historical necessity if NVIDIA wants to remain a stable, responsible member of the Dow. And you can see it right here. They have a clear pattern for this. They did a 4-for-1 split back in 2021. Then they did a massive 10-for-1 split in June of 2024. The precedent is totally set. I mean, they did that just to make the stock price manageable before they even got into the Dow. Now that they're in, the pressure is 100 times higher. A 10-for-1 split is just the clean, logical move here. It would take that insane $1,800 price tag and reset it to a much more reasonable $180, putting it right back in line with the other big dogs in the Dow. Plus, it makes the stock way more accessible for employees and regular investors, which is always a bonus they love to talk about. Okay, so if the split is pretty much inevitable, what's the trigger? What's the ignition point? Well, it's coming up fast. All eyes, and I mean all eyes, are on their quarterly earnings report on February 25th. This report is the catalyst that could absolutely force their hand. And listen, the expectations are they're stratospheric. Just look at this quote from Goldman Sachs. They're not just hoping for a beat. They are calling for a massive $2 billion revenue surprise. I mean, the bar has been set incredibly, incredibly high. So let's quickly run through the key numbers every trader is watching. Revenue projected at a staggering $67 billion. EPS growth expected to be over 70% year over year. But look, the most important number on this whole slide might be the implied volatility. The options market is pricing in a nearly 10% swing in the stock price on earnings day. That tells you everything you need to know. This is going to be a massive, volatile event. So that brings us to the big question. Do you buy before the February 25th earnings? So here's my trade. We have to navigate what I call the priced-in paradox, right? This is where so much of this fantastic news might already be baked into the stock price. My strategy for the next 2 weeks is what I'm calling a cautious hold with a selective buy on dips. So, step 1, if you're already in, you hold. Simple. You don't sell the market leader. Step 2, do not, I repeat, do not add new shares up here before the numbers drop. The risk reward is just not in your favor. And step 3, the real tell isn't going to be the Q4 numbers. It's all about the guidance for 2027. If we get a dip after earnings and they give us strong forward guidance, that is your entry point. And why am I being so cautious? Because the risks are very real. You could see a slowdown in AI spending. You've got increased competition from AMD and all the custom chips. And the big one I'm watching is the monetization gap. That's the risk that all these companies spending billions on AI stuff can't actually figure out how to make a profit from it, and they start pulling back. So let's bring it all home. This is a genuinely high-stakes moment for the entire market. We have a historic milestone, Dow 50K, colliding with a single stock that has simply become too big, too powerful for the index it lives in. Which leaves us with this one final crucial question. Is Dow 50,000 the new foundation for the next big leg up? Or is it a historical top, a ceiling that we're all going to look back on for years to come? The answer, in a really big way, hinges on what NVIDIA does next. The math says they have to split. We're going to find out on February 25th if reality agrees.